Stock markets in Europe are trading cautiously higher this morning, with the UK's FTSE 100 index just up around about 5 points, while the Euro Stoxx 50 index is higher by around about 10 points. In the bond space, both UK gilt and German Bunds are tracking a little higher. Yesterday we saw the 10-year UK gilt yield push up above 3%. That's the first time it's reached that level in over 25 months. A 25-month high was registered yesterday after the Bank of England failed to put out an accompanying statement with their unchanged policy decision. Over in the US, the 10-year US Treasury yield also printed above 3% as investors speculated that the Federal Reserve will start to taper quantitative easing at the September policy meeting. Now, going into other asset classes, gold is off around about $1, and oil prices are retreating a little bit, but are still elevated, with Brent around about $115 per barrel. FX markets are subdued at the moment, and when it comes to peripheral bond yields, they are behaving themselves as usual, and as they have been for the last few months. Italian, Spanish, and Portuguese in this particular case. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So let's start off with what happened in Asia overnight. It was a generally mixed session, with investors now gearing themselves up for the big US non-farm payrolls release out later in the session. As I said, one of some of the big movements was, of course, in the bond market space, where yields on the 10-year UK gilt, the 10-year US Treasury, and also the German Bund all reached highs we haven't seen since 2011. Big moves on that side, and that was generally on the optimism around the improving global economic recovery and the fact that central banks will have to at some point raise interest rates a lot quicker than the market, well, not the market, but a lot quicker than the central bank actually anticipates. That's certainly the case for the Bank of England. Now, going on to some of the key events that are likely to move the market. Of course, we have the Syria issue, which is underpinning a lot of the downside movements in the market. World leaders at the G20 have been discussing the issue of the US striking at Syria through a military intervention. Reconciliation still seems to be pretty hard found at the moment, with Russia and the US on opposing ends. We're going to see a continuation of these discussions today. It's unlikely to really see some sort of consensus, but nonetheless, it is something that the market is looking out for, as it will give us further indication as to what's going to happen next on the particularly worrying issue about what's going on in the Middle East right now. Of course, today, the big the data point that we are looking forward to is the non-farm payrolls report out of the US. Now, ADP numbers yesterday were lower than expected, coming in around 176,000 jobs created by the US economy versus expectations for around about 184,000. So a bit of weakness on that side has investors managing their expectations about what's going to happen today. We also had a better than expected jobless claims number out from the US. So these mixed signals don't really leave the market feeling a bit more confident about where payrolls are coming out today. Estimates range around 180,000 to 190,000 jobs created by the US economy in August, and the unemployment rate to stay steady around about 7.4% if, however, the unemployment rate does drop below 7.4%. It's likely to hasten the Fed's resolve to start tapering as early as September. We have a policy meeting on the 17th and the 18th of September. Investors will be casting their attention to that soon after this week ends, starting from next week. And it seems like that's going to set the narrative going forward in the sessions ahead. So this payrolls number is absolutely crucial to what the Fed has to say about tapering activity in September. It could be the deciding factor and if we do see a stronger than expected number, market expectations will rise that the Fed will start tapering in September. Other than that, we got other data to look out for. So UK manufacturing and industrial activity is something to look out for in a bit. And we also have French consumer confidence indicators. Other than that, not much else to say. So enjoy your weekend and watch out for this payrolls number. And I'll see you guys on Monday. Cheers for watching.